Okay, so good afternoon. Hopefully the mic still sounds okay. If there is any problem with the mic, if you don't mind, just letting me know. There we go. I'm getting stopped out in oil right now. So I'm sure I got stopped there. I'm not even going to check the account. I'm going to assume that I got stopped. Did my chart just give in, or I didn't want to put the arrow there for me? So I'm just going to mark this stop, and I'm going to mark it right out on the feed so that I don't get accused of being non-transparent. I'll confirm later that it actually did trigger, but I'm sure it did because it looks like it was dead on. I knew that stop was tight, but sometimes you just want to take the breather that you need. Let's see if I got stopped really quick. I better make sure. Just bear with me for 30 seconds here. Just gotta bring up the account. So many things going on today that I didn't even have this up on my screens. One busy day. Monday. It's Monday today, that's why. Tomorrow is the big day of the week. I already know it. Oh, I didn't get stopped. Did it not hit 43.27? CL? Weird. Maybe that order will come through. We'll see. Okay, so what I want to review first is my trades, because there's errors and there's things done right and there's things not done right. So the first entry here recently was at the bottom. It was at this channel wall, and I will explain really quick. You see how there's double lines here? There's a double line there, there's a double line there, and there's a double line there. These double lines have always been here. It's just that we don't always show them. Now that our members are coming along, so we've allowed 50 members into the oil trading room right now. I think there's maybe 15 people in the room out of the 50. Well, we have 46 or 47 members. There's 3 or 4 that are rolling over. But anyway, the point is that, oh, and by the way, we might even just allow 50 more into the room because the workload has been lighter than we thought. We wanted to make sure we had time with our members as required, but anyway, these double lines, what these are a rebalancing, and it's a matter, I'm not going to explain how it works, but you're going to see sometimes oil will trade to the one line and sometimes to the other line, and it's got to do with how the programming works of the large money pools, and getting everybody on the same page. Of course, everybody can't meet and get on the same page, because that would be extreme collusion of sorts, I'm sure, with the programmers for the various money funds. But the reality is that there's a way to see these time cycles forward or backward, and half are programming forward and half are programming from the last time cycle. It's hard to explain, and it's got to do with the way oil rebalances and with the charting and stuff like that. So you kind of have to put up with those dual lines, and you'll find as the week progresses, the one line will disappear. So that happens every week, actually. It's just that we've never shown it until now. And once you get used to it, you'll understand how to trade it. Anyway, that's a technical detail. I just wanted to explain why those double lines are there. And the report did kind of explain it. But anyway, as far as my entry is concerned, what happened was it came down to the channel support that we knew was there. So these channels, we know in advance where they are. And so it's just a matter of watching trade prove out, right? So it hit the bottom of the channel support here, and I waited for the second confirmation hit and for it to come up. So that was a perfect entry, execution wise. Then it got up over this main fib. That's what these horizontal lines are. That main fib, and it got up into this quadrant here, and I hit it. Perfect entry. Then what happened was I was playing for the up channel, and I was being double-minded, because not only was I playing for the up channel, but also we had a time cycle decision in here, and you can see where the volatility hit. It hit late, which is kind of curious to me, but it did that last week or the week before too. So I'm going to investigate that a little bit more. But anyway, the point is I was playing for the up channel. So when it got up to the main resistance at this fib here, basically right in the area of where this decision was, I should have exited here. So the proper place to exit would have been, and I'll put the white arrow there, so on the video it makes it easy. So proper execution here would have been to exit right here. And I was all over it. I could have. And so if you're trading this algorithm charting, this is the right way to do it, because it's all decision to decision, right? But it's a matter of your frequency and that kind of thing, but you don't want to be double-minded is the point. So I should have exited there. Then, you know, I held and it came back down and it hit the sidewall again and I entered. So that was, you know, considering the fact that I had held through that, that was the right entry. So I entered again, then I exited here. Why did I exit there? Because I knew this decision was coming. So being that I was now, you know, into it the way it was, I should have exited here. I should have re-entered here and exited here. So, you know, that was my error. Or even entered here. I didn't get this entry. Or no, it was down here. No, so this one's right. That was my only error there. So then it retested the wall down here, but this was right. The reason why I didn't take an entry here is because we were getting so close to the completion of the time cycle. And so that was right. And then we got up and over an important area of resistance, this fib, and then I entered once it got into this quadrant. So that was right. Then we got up into here, and I knew that when I entered here, this was risky. I was entering over these purple lines are previous support and resistance, conventional charting. They're not algorithmic model charting. And they're the weakest of the bunch of the horizontal supports. The fib lines are much better, and the support and resistance of the algorithmic model are much better, and those aren't on here. They're just up above that resistance, the gray and the yellow ones. But anyway, well, the gray ones. The yellow ones are really strong conventional charting support and resistance from previous time cycles. But so when I took this entry over the support, I knew it was risky, but I thought, well, I'll play for it. And I was playing for a small margin because here's the quadrant wall. These diagonal lines are all the most important support and resistance. Well, one of the most important. And so I knew that it was very possible that I was going to run into a wall here. And if not, I had this serious resistance and this serious resistance right above. So I was playing, the short, not the short, but the, you know, a very small potential upside. Because I would have to exit in here at one of these, see how it proves out. Anyway, it didn't look good, so I exited here, and then sure enough, right after it started to come off. So that was good timing on the exit, and it was just the way that oil was trading. When you look at these charts after the fact, it's not like looking at them while oil is trading through. While oil is trading through, you can see the dynamics of how it trades through this algorithmic model. It's much different when you see it banging up and down and up and down, and then when it gets up through, into a quad like this, and it spikes, and then it comes off, and then when it gets through the next resistance, it spikes. That's much different than looking at the static chart after the fact. But anyway, so I got out here, it came down, it got to support. It, all these tails down there told me the machines are in for sure, because humans can't trade this way, unless everybody's got the algorithmic model, right? And they don't. So, the machines are in, and then all of a sudden, see, the machines will only hold while humans take the trade. So, when the machines just take it to decision to decision and wait for the humans to confirm up or down, and the machines just take it there more efficiently is how it works. So anyway, what happened was it came off hard. Now I was in right here above the fib. You see how I entered above the fib? So it hit support, it was bouncing in between, and then boom, it got over the fib. And so I did that right. I was waiting for the confirmation, right? So you always try and get a second confirmation, and the fib, so the wall was my first, bounced off it, got over the fib, and I took it. So that was a proper entry. It's just that it fell off. Where I made a mistake was I should have exited in here, but there was all these tails, and that's what confused me. And so by the time I was in here, I was like, oh man, do I really want to take the hit on that? I'm more than positive that there's a divergence in trade right now, just through the math that we're doing, and I think the chart's repairing, at least for a short term up, right? So I thought, well, I'm going to sit through it. Then it lost this quad, and I was like, oh man, that's serious. And if you've seen how this was trading, every time it lost one of these support and resistance lines of the quadrants, it would tank again, and then it tanked right down to the fib. Now I notified into the group that I was going to hold and make oil test this fib, and I was prepared for this tail here too, something like that. So I put it right into the room, and I think I put it on my feed, on Epic's alert feed, that I was going to sit through that and make it test this fib, because the thicker these lines are, by the way, the more powerful they are in terms of support and resistance. That's another important part of the modeling. Except for those horizontal yellows. Those horizontal yellows are already, all they are is really thick purple lines. So they're really, really thick ones that are given a different color to make sure that traders see them clearly and know that those are there. Now, I'm not talking about the greenish yellow down here. I'm talking about the yellow. So here, let me show you what they look like. Right there. So those are really important. Those are conventional support and resistance, but really heavy duty ones that have tested over and over and over again for years and years. And the gray are the algorithmic model. And they're always, about that far apart from each other for whatever reason. I'm not sure. So you could say that I was right in holding, but I was wrong in that I should have cut right here. There's no reason not to cut there, because you can cut, take your little loss, and then, when it regroups and proves itself out, go long again. So I should have cut there. But anyway, what I ended up doing was holding, and I said, well, I'll hold until, it possibly comes down and retests, me flat. And so now I'm stopped. And, if I wasn't stopped on the last candle, I'm stopped on that candle. So I got lucky, but I also, had knowledge that the average oil trader wouldn't have, right, because of our modeling. So that's what I did right and wrong. If you guys have any questions about what I did right or wrong, and why, I thought the reasoning I thought through, you know, go ahead and email me or DM me. Emails are typically better because when I'm at night doing my work, right on my keyboard, it's a lot easier to type and stuff. I'm an older guy, I'm not a younger guy, and fat fingers and on a cell phone, blah blah blah. Okay, not that I couldn't do it on a keyboard, I guess. Funny, eh? Old schoolers. Now, the possible down channel, just to be clear. Well, let's do the up channel first. So the up channel that I was shooting for, this is the midline right here. So picture a runway. These purple dotted lines, they're just for the purpose of showing you the width of the channel. They are not support and resistance. They do nothing on the charting. So see where they stop here. So that's the top side of this. And this arrow shows you the direction of the channel. So that's the top side of the channel, the midline. And if you picture a runway, that's probably the easiest way to do it. And then here. Now, what you're seeing, oh, well, first of all, the down channel is, here's the top of the down channel here, where this arrow is here. And then, you can figure it out from there, but because it's the same width as the one up top, right? It's just going down. This is the midline. All of this charting is here in advance of trade. That's the most important thing. So it's like a GPS. I keep saying that because it's important to picture it like that, because when I'm trading, now one other quick thing is for people that don't know, this is all hand drawn as I'm trading, right? To help me through my trades intraday. So these are not going to be perfect. These are, you got to give yourself a little allowance, but they're close. You can see how, oil is up against, the support and resistance and how close that is. And we kind of correct it as we go along. This is what's getting coded, right? So eventually I won't have to do that. And the intelligent assistant, the digital dashboard that's being coded, each one of these will give the trader, the human trader, a probability of trade depending on what their plan is, right? Anyway, that's the software that we're developing. So we know where the channel up is, we know where the channel down is. What is not normal, and this has been happening a little bit lately, we're seeing this, is we're seeing it get up into the channel and fail. So what we're, the best guess that I have for that is that the machines are taking it up in there and waiting for the humans to confirm, and the humans just aren't confirming, so the machines are letting it go. But normally it would fail before it has lately. Once it's up in a channel or down in a channel, it stays there. It doesn't typically leave that channel until it gets to the next decision. And the next decision, I'll show you how you know where the next decision is. So you've got your support and resistance, your main algorithmic model support and resistance areas, that yellow line and that gray line. But more importantly than that, when you don't have those, you want to know where your next decision is. Your next decision is at the quadrant walls. So if it passes this and keeps going, well, then you're still up in the up channel. But then, you always have another down channel possibility. So what do I mean by quadrant walls? So if you can picture a baseball diamond, here's the outside of the diamond. And you come, bring it over here a little bit. There's the top of the diamond, down, down. So that's what I mean. So where trade is right now, so the whole model works like this. Up and down channel, your next decision. See, it got up over here, right? Which was the decision to get into the up channel, but your next decision is up here. And it's always this width. It's always the same. Now, when oil gets funky like it has been lately, or it's sideways oil trade, it's starting to do weird things like this, where it's falling out of channels and then going back into the channel. That's not normal activity for oil. But you know what? The last number of weeks, and I can't remember how many it's been. I bet you if I had, to guess, it's been 12 to 16 weeks where, if you look at a 5-year oil chart, oil's been sideways for 16 weeks, kind of down lately and sideways. Normally it's up channel for a while, and, down channel for a while, up channel, and it trends up a channel for, normally you'll get, like if you look at a 5-year chart, you'll get 16, 20 weeks kind of thing, or at least 8 or 9 weeks up channel, and then at least 8 or 9 weeks down channel, if not more. So it's been very funky. So oil traders aren't doing that well right now. I know a lot of oil traders, and they're struggling, and I can see why. So on the intraday and tighter, this helps a lot. It's just that you have to execute properly, and I would say that my explaining what I did right here and what I did wrong will help. I know that my alerts will help you, and my comments will help you about what I'm doing right and wrong. Right now, what would I do? Right now, because there's a divergence in trade, like what I mean by divergence is the fact that it fell out of the channel and it came down and it had to test that major support, that fib, and then come back up. I'm still biased long in the channel, but the reality is, when it fell down there, I was thinking, well, maybe it's picking this. It normally doesn't function this way, but it's kind of been odd lately, oil trade. Well, not kind of. Like you look even 10 years back, this kind of trade doesn't happen in oil. It makes me think it's, a managed market like the S&P, but how could you have a managed oil market? Like, is that actually possible with that liquidity? Maybe it is possible. I don't know, but I do know that it's divergent. It's not normal. It's not trading normal. To have a sideways action for that many weeks is just not normal. Look at an oil chart. So what I was thinking was, well, it's come off. It's at that fib. Maybe it'll go up this channel, right? Here's the midline for this channel. It's just a parallel up channel, right? So you got to consider those things. So if you look at your charting and you think through what I've told you as far as the channels, the way that those quadrants come together, the way that they form the channels, and you look back on older videos and watch those, you'll see that the whole grid, I can tell you where the grid is in 6 or 16 years or 6 months, because it's an absolute, like it's just a matrix that it trades through. And to believe that it does, you would have to go back into all our reports for the last 9 months and realize, hey, you know what, this actually trades this way. And that's oil, that's how it trades. So anyway, I wanted to cover my trades, what I did right, what I did wrong, the channel decisions, and also where my bias is. And my bias currently is long, but not as much as it was earlier today. What changed that bias a little bit is this divergence. Whenever you see a major divergence like that, you got to say to yourself, that's really odd. So what will I do now? What I'll do is I'll trade intraday off of my supports. I'll go long, and I'll be very cautious. And it's very possible that in each one of the quadrant, the wider quadrants, like where I showed you the baseball field, this is the outside, right? You'll find that quite often when trade isn't real strong, it'll sit in this, we call it the test area. It'll bounce back and forth. You see how it did it down here? Let's go back down here. See that? It bounced in between. When you see that, you know it's not that strong. When it bounces out of it, see, that's why you see me taking, see, I knew it was coming out of it because of the velocity of the trade in here. I start entering, or I enter at the support of it. Now you could trade, the width of it. So let's say, as an example, 43.10 to 43.37, you're getting, at best 27 cents. Yeah, it's not the best trades. I mean, on a $43 play, you want to see, my preferred trade is $1.20, 3%, right? But those days in oil aren't there right now. That's the challenge. So you got to be smart about it. And that's why my entries will be like 1/10 and then 2/10 and then 3/10. If it's really aggressive trade, I'll go 3/10 right off the bat. and go in 3 times instead of 10 times or whatever. So anyway, that's what it is. I didn't want to spend much time on it. I wanted to make sure I reviewed my trades, reviewed the chart, and reviewed my bias. So is there any questions before I get on to anything? Or before I get on to anything, before I get on to the rest of my afternoon? And no hurry, by the way. I actually have a lot of time. It's just I put that wrong. I didn't phrase that properly. Can I do a day where I trade? You mean like so as high frequency as possible? Is that what you mean, Henry? Like the tight time frames and just high frequency it? The reason I'm qualifying you on that question is that what you're seeing here, like those trades in and out, that's pretty high frequency. That chart, like it's not really high frequency, but that's pretty high frequency. Like I missed a few trades here. I missed the out up here where the white is. I missed an entry down here that I should have hit. You know, but really, there isn't much room in here for many more trades. Like you could do it, like maybe one there. So really on this chart, this is about as high frequency, you know, like, and remember this is 24 hours, right? So in total, well, there's one down there, right? So in total, you got 1, 2, this should have been 1, 3, 4, 5. This is not a trade. 6, 7, 8, 9, 10, 11, 12. And what is that over? So today's Monday, the 26th. So 12 trades over. So that's the 21st, but we had the weekend, right? So so that would be 3 days of trading or so. It's really hard to do much more than that. I mean, you're gonna chop yourself up. Like you can't, like when oil's really predictable, of course, yeah, you can get into 10 trades a day. Totally different scenario. But choppy trade like this, you got to be really careful. You can chop up your account. So, or maybe on what you see. You can see things in the market that we can, especially with CL. Yeah, I'll do my best to give you. See, the thing is, when I'm not trading, it's because the setup isn't there, so there really isn't anything to comment on. So when you see me trade, or when you see those trades in there, you're seeing the time to trade. If people are trading more than what you see there and what I've shown you as what could have been trades, I'll tell you, it's not reality. Like there isn't enough room in those trades. Like you get higher frequency than that. You have to have a massive account, first of all. But yeah, so the short answer to that is I'll do my best to stay up on top of each setup as they come. But I wouldn't expect much more frequency than that unless it gets really predictable. So when you get in a really strong trend, up or down, totally different story. The frequency can go right to the moon. But while it's in, you know, chart repair time, this is what you can expect. You know, maybe a little bit more, like I said, but you can only expect 3 or 4 trades a day during this kind of a time period. So, but I hear what you're saying, so I'm going to stay on top of that. Anybody else have anything? Okay, cool. Oh, wait, I might have one more here. Okay, awesome. So I think we're all in good shape. So that's what I wanted to cover today. So thanks, guys, and we'll talk to you soon. Bye.